Welcome back to the deep dive. Our mission here is to take these really complex systems, decode them, and, distill them into the knowledge you need to navigate the world confidently. And today we're diving into a really critical, high-stakes topic, making major purchases and just navigating the U.S. marketplace as a new immigrant. I mean, if you're new to the country, whether you're here for work or family or opportunity, the financial rules can feel like they were written in invisible ink. So we're going straight into the world of buying a car.
Which is a foundational necessity for almost everyone here.
Exactly. And we'll cover how to make sure you are protected against the unique financial hurdles, the information overload, and of course, the potential scams that often target new arrivals.
That financial transition is, I think, one of the steepest challenges anyone faces in this country. New residents, they often run into these walls that established citizens just rarely even think about,
Like,
primarily the challenge of building a U.S. financial identity from scratch. So we've pulled together materials that not only lay out the exact steps you need to take, but also give some stark warnings about where the system can, actively work against you.
okay, let's unpack this. We should start with that first major hurdle, getting reliable transportation. We've synthesized the guides and found a pretty clear four-step process for getting yourself on the road.
Right. And step one is just getting your driver's
Which
license.
seems simple enough.
If you're residing here legally, the process is, mostly bureaucratic but straightforward. It means a trip to your state's Department of Motor Vehicles, the DMV, passing a written test, a driving test, and providing a lot of specific documents.
But here's where it gets fascinating and shows how things are changing. While the rules vary wildly from state to state, our analysis shows that as of June 2020, 16 states actually allow undocumented immigrants to get a driver's license.
That's a huge shift. It shows this growing recognition that mobility is a necessity for everyone. And no matter your status, the documentation rules are strict. You have to bring proof of identity, usually a valid foreign passport or a visa, and you have to prove you live there.
And for proof of residency, they usually want two different documents, right?
That's right. Things like recent utility bills, maybe tax returns, or a current lease agreement with your name on it.
Okay, so that's step one, getting licensed. That brings us to step two, acquiring loans. Now, paying cash is obviously the easiest route, but for most people, financing is the reality.
And that's where you hit the big wall. The lack of an established U.S. credit history.
But the market has responded to this, right? We're seeing more specialized immigrant-friendly providers pop up.
We are, yeah. And they exist specifically to bridge this gap. They let new residents basically skip the traditional credit check that would automatically disqualify them at a big bank.
We saw one company in the sources, Stilt.
Stilt, yeah. They're dedicated to this underserved market. They can offer up to $35,000 without a cosigner.
Or even a Social Security number.
Right, and what they're doing is they're using alternative data to figure out the risk. Instead of a FICO score, they'll look at your education, your job history, how stable your income is.
So they're looking at your actual ability to repay right now.
Exactly, it bypasses the old system. And there's another one mentioned, International Auto Source, or IAS.
They market themselves to expats.
Yeah, helping them buy, rent, or lease without a credit history or SSN, and they often bundle it with access to low-cost insurance. So these resources are critical. They get you around those initial walls. They really do. They turn a huge problem into just a manageable task.
All right, so moving to step three, getting the car. Before you even step foot on a lot, you need to ask yourself some basic questions.
Like, how much do I actually want to spend?
Exactly. What's the main reason for the car? Is it commuting, family trips, and, how many people need to fit in it?
Simple questions, but they narrow the field down so much.
They really do. And once you know that, you can dive into research. Edmunds is still great for comparing cars on things like drivability, safety, crash ratings.
And for just seeing what's out there, TrueCar and CarMax give you this huge online marketplace with pretty transparent pricing.
But if affordability is the absolute #1 priority,
Then you're probably looking at Facebook Marketplace or other classifieds. You can find the best deals there, but you have to be so careful.
yeah, what you save in money, you lose in guarantees.
Absolutely. You really need to know what you're looking at or, bring someone with you who does.
Okay, finally, step 4, insurance and registration. And this point was hit over and over in our guides.
Auto insurance is mandatory. It's not optional. Every single state requires it.
And here's where the system can feel a little unfair again.
It can. Because what happens is recent immigrants are often classified as new drivers, period. It doesn't matter if you have decades of driving experience from your home country.
And that new driver label means higher insurance premiums.
Significantly higher,
Right.
which means you absolutely have to shop around. The rates are all over the place. We saw data showing some companies, like Farmers, offering rates as low as, what, $38 a month?
38 a month, yeah. While another one, Arrowhead, could charge up to $323 for basically the same coverage.
It's a massive difference. You just cannot take the first quote you get. And also, check for state-specific aid.
Like in California.
Exactly. California has a low-cost auto insurance program for income-eligible residents. You could end up paying as little as $400 a year for coverage.
Wow. Okay, so once you have the insurance policy, the very last step is registering the car with the DMV, paying for plates and the documents.
And then you're on the road.
So now we have to talk about the real frustration here, the credit hurdle. Even when you do everything by the book, we found this story on Reddit that just perfectly captures the problem.
Oh, I remember this one.
It was a non-citizen buyer, had a
Yeah.
fantastic credit score, like 750, 800, 8 years of history, low debt, just financially solid.
By every metric, a perfect borrower.
And yet they were denied financing by a major captive lender.
And the reason was just because their Social Security card had a note on it saying non-citizen. That's it. It's pure institutional gatekeeping.
And for our listeners, what's a captive lender?
A captive lender is the finance company that's actually owned by the car brand itself. So think Honda Financial Services or Toyota Financial.
So they're part of the same company.
Right. And because of that, they're usually the most motivated to get you a loan. But their internal rules can be really rigid. In this case, that perfect credit history didn't matter. He was overruled by his status.
It's just so frustrating. So then a big bank, Capital One, offered him a loan, but at 11% APR, and they demanded an $8,500 down payment.
Even though he had plenty of available credit and no debt, the system was basically punishing him for being a responsible borrower who just happened to be a non-citizen.
And that exact situation is what pushes people toward alternatives, like the buy here, pay here dealerships.
The BHPH lots.
Yeah.
Yeah. These places are both the seller and the lender, so they do their own in-house financing. They completely skip the traditional credit check.
But they have such a bad reputation. I mean, why would someone choose that over an 11% loan from a real bank?
Because for many new arrivals, it feels like the only option that will say yes. They'll accept an ITN number instead of a Social Security number or a foreign passport. They're focused on getting you in that car today.
But that access comes with some serious risks.
Oh, huge risks. The market is full of predatory practices because the buyers are seen as, having fewer options and less power to fight back.
Right, and we see things like excessive interest rates, especially where lenders are exempt from what are called usury laws.
And just to clarify, usury laws are the state rules that cap the maximum interest rate a lender can charge.
So if they're exempt, the sky's the limit.
Pretty much. And worse, we see dealers inflating a borrower's income without checking, just to approve them for a loan they can't possibly afford.
That's incredibly dangerous.
It is. And then there's the aggressive upselling of bogus fees and add-on products. I mean, just look at the Wells Fargo case. They were fined $1 billion for forcing hundreds of thousands of customers into auto insurance they didn't ask for or need.
So let's arm you, the listener, with some practical defenses. Let's talk specific dealership tricks to watch for. First one, focusing only on the monthly payment.
Right. A dealer will make that monthly number sound great, but they might be stretching the loan to 7 or 8 years. You pay a ton in interest. You have to demand the total out-the-door price. That is the only number that matters.
Number two, watch out for the unnecessary extras.
Extended warranties, paint protection, VIN etching. These are high-profit items for the dealer. You can almost always buy them cheaper from a third party later on. Just say no.
Third, the classic bait and switch.
They advertise a car at a fantastic price. You show up, and oops, it was just sold. But hey, they have this other more expensive model you might like.
If that happens, you just have to walk away.
You walk away. And finally, always, always negotiate your trade-in and the new car price as 2 separate deals.
Why is that so important?
Because if you lump them together, it's easy for the dealer to play a shell game with the numbers. They'll give you a great deal on the new car by totally lowballing your trade-in. You have to keep them separate.
This all brings us back to the question of fairness, which is something Unido Sasso looked into. Their research highlighted how Latino communities in particular are affected by discrimination in indirect auto lending.
It's a huge issue.
Yeah.
And it centers on that dealer markup practice.
So walk us through that one more time. In an indirect loan, the dealer is the go-between.
Correct. They connect you with a bank that sets a base interest rate. But, and this is the key, the dealer has the discretion to raise that rate. That extra amount is the markup.
And the dealer and the lender split that extra profit.
They do. And that one little practice costs American consumers $1.1 billion a year.
That number is just staggering.
Mm.
And the discrimination data is even worse.
It is. Studies found that non-white buyers, who are actually more qualified, we're talking better credit scores, better finances than their player, white counterparts were charged, on average, over $2,600 more over the life of the loan.
$2,662. That's real money.
That's rent. That's an emergency fund. It's just staggering proof of how this discretionary markup leads directly to pricing discrimination.
And this shows how vital it is to understand your consumer protection rights, not just with cars, but with all kinds of essential services.
Especially immigration services. This is a critical point. Immigration assistance service providers are not lawyers.
What's the difference? What can't they do?
They cannot give you legal advice, they can't tell you which government forms to use, and they can't argue your case with U.S. Citizenship and Immigration Services or USCIS.
So what are they allowed to do?
Administrative stuff. They can translate documents, notarize things, help you gather your papers, and type up the application forms, but they cannot advise you on how to answer the questions.
And there's a major trap here, especially in places like New York, with the term notario publico.
Yes. In many Latin American countries, a notario is a respected attorney. Here in the U.S., a notary public is absolutely not a lawyer and cannot give legal advice.
And another warning, never pay for blank government forms.
They are always free on the USCIS website. Always.
The advice is clear. Always demand a signed, written contract. Never hand over original documents, only give copies. And always get a receipt with the provider's name and address.
You have to maintain that paper trail. And this applies to your basic financial health, too. Open a bank account right away. Look for things like the NYC Safe Start account, which have low or no fees, and importantly, no overdraft option on ATM withdrawals, which protects you from those awful fees.
And just be aware of these incredibly expensive, often illegal, products that target people without credit.
Payday loans, for instance. They're flat out illegal in New York State. And avoid rent-to-own businesses. You often end up paying more than double the item's price. The APR can be over 100%. It's financial quicksand.
The sources also mention some really specific targeted scams.
Yeah, like the blessing scam, which often targets older members of the Chinese community in New York. They steal cash and jewelry during a fake religious blessing. And the fortune-telling scam. It's actually illegal in New York to charge money to predict the future. Knowing these exist is the first step in avoiding them.
Okay, let's wrap up this section by looking at one of the most abusive practices in the auto world, yo-yo financing.
Also called spot deliveries.
This scam is just designed to strip you of all your power after you think the deal is done. The dealer lets you sign the papers and drive the car home, making you believe it's yours.
But the financing isn't actually finalized.
Exactly. They call you back, sometimes days or even weeks later, and say, sorry, the loan fell through.
And then they refuse to honor the deal you signed. They pressure you into a new, much worse contract with higher payments or a higher interest rate.
And the harm is just immediate. You can lose your down payment, your trade-in vehicle. We saw a case study from Oregon where a guy couldn't get to work because the dealer kept his trade-in and his cash, leaving him completely stranded.
It's awful. And this practice just completely undermines the whole point of the Truth in Lending Act, or TILA. TILA is supposed to guarantee that the contract terms are final and accurate.
But if the dealer can just change them later, the law is meaningless.
It becomes meaningless. And it often violates the Federal Odometer Act, too, because it's not clear who legally owns the car, which puts you in a terrible position.
Consumer advocates are pushing the Federal Trade Commission to step in here.
They are. They want a simple rule. A credit contract is final and binding the moment the buyer signs it. The dealer cannot change it later. That one rule would fix the whole problem.
So the core insight from all of this, whether we're talking about a car loan or an immigration service, is that knowledge is your best defense.
It truly is. You have to read the fine print, you have to demand clarity, and you have to understand that a lot of services and government forms are actually available for free. Critical thinking is just essential.
Absolutely. We've seen that getting a loan without traditional credit is possible. It can be done. But that access opens you up to risks like high markups and, outright predatory behavior.
Which is why the key takeaway for you has to be the importance of doing your homework. Shop around for insurance and get a pre-approved loan before you ever walk into a dealership.
Exactly. Go in armed with the knowledge of what you can actually afford. So let's connect this to the bigger picture and leave you with a final thought. We've seen that all the guides, all the warnings, they all emphasize transparency and shopping around as your best weapons.
hmm
So how much easier, how much fairer would the entire car buying process be for everyone if dealers were federally required to disclose their maximum interest rate markups right up front, instead of having this hidden discretion to raise rates, often based on bias? Something to think about. Thanks for joining us for this deep dive.